Hey there, good morning guys. Good day, good evening, wherever you are at the moment. Hope you're doing well. Welcome to the midweek workshop. Just give me a thumbs up in the chat if you can hear me okay, if the stream quality is okay. And if the music's not too loud. Just wait for a few more bods to turn up and then we'll get into it. All right, let's get on with it, guys. Let's start over on the calendar. Let's start our day over there. Let's get the calendar up. There we go. That's better. All right, there we go. So Wednesday, no news today. So quiet day on the news front, no high impact news. And if we also have a look at oil, generally there is inventories today, but I don't believe it is today. Let's just tidy this up. Don't need any of that. So nothing of interest today on Wednesday. Oil inventories has moved to Thursday this week. So we've got natural gas storage and oil inventories all on the same day. So nothing today. So liquidity will come into the market at that 9:30 open, more than likely. Let's head on over to the charts. Feel free to interact, guys. Message in the chat box and we can discuss whatever questions you might have. Just confirming you guys can see the chart there, okay? There's a thumbs up in the chat. It's getting an error on my end. So I just want to check that you guys can see everything okay. Otherwise I might have to end the stream and start again. Okay, perfect. Perfect. Good morning, Mr. Nobody. Good morning, Sharla. Thank you for that. All right. Okay, so getting started, just a reminder, guys, that we have the Discord open, Trade Foundry. So head over there and you can follow us a lot more closely over there. The link is in the description of this video. And a reminder too, guys, to use code Jimmy if you're looking to buy any MyFunded Futures or Apex accounts. MyFunded Futures still has the 40% off for new users, the 50k starter plus accounts, and 20% off for existing users. And when Apex doesn't have a sale, you can always get 50% off with code Jimmy. Sharla, what is the indicator that shows the high time frame candles? It's this one here, ICT high time frame candles by Fardy. And that's the one I use. And you can, there's plenty of settings in there. What time frame you want to have active. So I just have the hourly. I think there's a look back period as well. So this is the amount of candles you want to have through here. So I just have 10 candles, which seems to work just fine. It's a great little indicator. While we talk about indicators, I'll just bring your attention to the ADR by Jimmy Trades. It's an indicator that I've just recently published. It's this little one up here. You can see this where it says ADR. So ADR is the average daily range. And I'll show you guys today how I use the average daily range in my trading. And this just gives me an indication of what the average daily range is up to date. This is based on a look back period. So you can move the indicator around the chart to whichever position you like. I do have some sort of error with this table size. Table size won't adjust, so I need to work on that. But otherwise, you just have a look. You can change the look back period to 365 days if you want a year's worth of data there, but I just use 180. If you do grab that, guys, head over into TradingView. This is here, ADR by Jimmy Trades. Make sure you give it a boost. I would appreciate if you could give it a boost if you choose to use it. So we'll have a look at that and how I also use the 7-hour candles for Confluence. But we're on the gold chart at the moment, and we're just having a look here at an opportunity that played out during London. And then there was actually another move lower here as well. So gold giving the goods this morning. Hey, good morning, Jake. Mr. Nobody, we can have a look at NQ. Let's have a look. Good morning, Mohammed. How you doing? Let's clear some of these indicators. That's better. Marcus, thank you, buddy. Good afternoon. No, I don't, Jake, I don't take trades outside of the kill zones. I just stick to the kill zones. I was just showing this as an example of gold giving a couple of entries, and the reason for that was I wanted to also look at this hourly candle formation here and explain how I use this formation and why I also thought this price would move lower here. So gold kill zone, because I just use the futures kill zones because I trade the futures contract, that's all. You probably could use the Forex if you're trading Forex, obviously. You could you could use that kill zone, but I just stick to the futures kill zones. So it's the same for London anyway. It's 2 to 5 a.m. Eastern time, and then I trade New York from I actually start looking from 8 a.m. Eastern to through till 11 or 12. 12 is the cutoff I'd get out at, but I'm actually looking to finish it around 11. Mr. Nobody, what did you want to have a look at on NQ on the 5-minute? Anything in particular? And then we'll just duck back to gold and have a look at that. Right, while we wait for Mr. Nobody to give us an idea of what he wants to look at, we'll have a look at gold again. So I might start from the daily. This isn't relative to those two trades, but I just want to show you what I do moving into my trading day. So the first thing I do now is I look at where price is in relation to the average daily range, which is where this comes in. Now, the indicator really only works on futures contracts. It won't work on currencies, okay, at this stage, just so you know. It will work on gold, NQ, ES, YM, RTY, but it won't work on, say, 6E, for example. It just won't give you the right figure at this stage. So just a few things to work on to make that happen, but it's a working indicator for futures right now. So what I do is I come to the chart and I want to see, we've got ADR of 36.2. That's the average daily range for gold. So I just grab my measure tool. If we measure yesterday, actually we won't use yesterday because yesterday was essentially 2 days rolled into one. It really doesn't matter which one we use, but we can see that if we measure out this candle, that candle moved 36.6. Okay, so that day's range was 36.6. Now, why is that relevant? Because when I come to the chart for New York, I want to measure out the current range and see how far price has moved. So at the moment, we've moved about half the range, half the average daily range, okay? So that says to me, all right, well, you know, we could potentially expand further in this instance, or do we continue to move lower? So, and I'm measuring from the candle low to the candle high, so from the wicks. So there's potential we could continue to move lower even. So I know that we've still got room to move today. If I got to the charts and price, you know, had already expanded you know, even $30, right? If price had already expanded $30 or so, which is very close to the average daily range, then I want to be looking at potentially trading back into the range because price has already reached its average daily range. So why would I want to take a long, if we are looking at longs, why would I want to take a long position when we've already reached the average daily range or very close to it? So that's what I'm looking at from a daily perspective. It's just a simple little tool to add into the mix. It's actually something I've been working on with Adam, Day Trading Realtor. You guys might know him by. If you jump over to his channel, give him a follow as well. He's a great guy, provides so much value. So then I use the 7 hour and start looking at, okay, so we know that we've only moved about half of today's range. All right. Looking at the 7 hour, I just use 3 candles, but well, I use 2 candles because the third one is the New York candle. So what do we see? We've got the 1800 candle, or the 6 p.m. candle. And then we have the 1 a.m. candle. So I use the 6 p.m. candle as the Asia range, and then I use the 1 o'clock candle as the London range. Jake, sorry, can you show again how you measure the ADR on the asset? Oh yeah, okay. So let's just go back out to the daily quickly. All you do is grab this measure tool, and I just measure from the low to the high, and we can see that we've moved $18 when on average we move 36 for the day. So we've only moved half of the average daily range so far today. So then when we look at the 7 hour, we can see that no worries, buddy. We can see that the 1 a.m. candle has swept the Asia range. So we've swept the Asia range. So that says to me that we're possibly looking at a London reversal with a New York continuation. So I would be looking potentially for price to run lower today on gold. London reversal, New York continuation, and we know that the high was about half of the daily range. So if we run lower, we can see that, around there is potential where we still could move to. So we could still move down as low as here based on the average daily range, which would push us into a bullish FEG on the 7 hour. So it makes sense that we could potentially draw down into this area. Then I couple that with, and I either use the hourly or the 30-minute. Okay, and what am I looking for? Does anyone know what I'm looking for? Hit me up in the chat. Someone must know what I want to see. Come on, who's brave enough? Who's brave enough to guess? Displacement lower, yeah, okay, cool. So I want to see a change in the state of delivery. Now, ideally, I want to see this obviously before. I want to see this before market open, if that's possible, which is why I also look at the 30-minute. And I want to see that change in the state of delivery. There's nothing clean here on the 30-minute. You could look at this up close candle here. We are starting to get displacement. We've had a sweep, so we've got a high, a low, a high, a high. So this could be you're changing the state of delivery here. So we are getting confirmation of that potential move lower. Likewise on the hourly here, a close below here would definitely confirm that move lower as well. But if we're waiting for the change in the state of delivery, we could also miss those reversal trades. All right. So I just like to use this as confluence so that when I get into the New York session, I've built my narrative basically from daily. I know what the range of the day is. I also do look to see where we are in relation to swing highs or FVGs, I don't put as much weight on that as I used to though. Okay, I don't, and I know I do talk about IRL to ERL in my videos every day. I don't personally put as much weight on that as I used to, and that just comes with time. I think you still need to understand the idea behind it, and you need to understand the fundamentals behind that process, particularly if you're a beginner or just learning ICT concepts, for example. But now I look at the range of the day. I use the 7 hour to look for a potential reversal. And like you can see here, gold's a great example at the moment. We know that we've only moved half of the daily range already, and it looks like we're putting in a London reversal. We move to the hourly, look for a change in the state of delivery. Nothing here yet. 30-minute, yes, we do have a change in the state of delivery. So all of this is giving me confluence to look for potential shorts. Then what we have is a great example of one that's just played out, because then I'm looking for this. This is the hourly candles on the side here. So my time frame alignment, hour to 5 minute. So I'm looking at the hourly. This candle right here, this swing point candle, some refer to it as a C2. This is some concepts that I learned from T-Trades. If you have not joined the Market Lens to experience T-Trades content, I highly suggest you do that at some point. There's a lot of value that T obviously provides, and I'm very grateful for have spent some time in there to be able to use some concepts to sharpen my edge. So this swing point candle, as I've called it, what happens here, we've swept London high, so an important level. And when we've swept the high, we've also closed back inside the range. So this is the important part. This previous candle's range. Okay, it's from the high to the low. So including the wicks, we swept the high and we closed back inside the range. That is a signal to a change in order flow. What do we have at this time? We have a breaker. We have an FVG in the leg that swept liquidity. So this is where my model comes in. The Pegasus model. We have a FVG that swept the leg, in the leg that swept liquidity rather. And then we have an FVG opposing that, all right, which is our FVG in the leg through the breaker. So we also then end up with a balanced price range, an IFVG. So all of these things all these PD rates overlapping, giving you a strong confluence to price moving lower, potentially. Doesn't always, but we're adding things up here. So we've got our candle closure back inside the range. We have our Pegasus model with our inversion, our balanced price range. And then we get a closure through the breaker. We have low resistance liquidity. And even if you were just looking at this swing point here as a potential draw, I think that level even gives you 2R at that point. Stop above the breaker. It's a 26 tick stop. So I would just position above the breaker for this one. No need to go to the swing high. Oh, and 2R actually lined up perfectly with that low. So really good level for your draw. So it's a great example here, how we can tie everything in together and see a winning trade. Right. So let's have a look at so there's also a CL trade. So there's a CL reversal here as well. Again, we can see this candle swept the high. And if we go to the hourly, it's also into a bearish FEG. So point of interest plus the sweep of the high of the previous candle. This is your swing point candle. Crazy displacement through this breaker. We don't get filled on this, but this is also where looking to market order in once you get a close through. I would rather leave, what's that, two ticks. So if you're playing a mini, it's only $20. I'd rather leave $20 on the table for potential to grab, $370. There was also this trade on the way up from London low. Now, I'll probably talked myself out of this one a little bit. Well, actually, I know I did. So here was a breaker. Initially, I was looking at this level here to try and get price to tap back into. And I would have taken a long from there. But that didn't happen. Price didn't come down that far. But once price broke through this breaker, well, it was fair game. And you can see that, what do we have here on the hourly? We have the swing point candle closure. So swept low. Did we go into a point of interest? We had this swing low here. I was a little bit unconvinced just because of the close through. I think this is where I started to talk myself out of the trade. We had this reasonably strong close through with the displacement. The displacement is probably more what I was looking at there. But then really my focus should have shifted once we had this candle closure, because that's the concept I use. Okay, that didn't happen. And I missed what turned out to be a very nice trade, albeit that, price did muck around a little bit through here. That would also put you off a little bit. It didn't displace. I do prefer to see that displacement straight through. And again, it's a Pegasus trade as well. Really not sure why I didn't take this other than telling myself not to, for whatever reason. But anyway, we had an inversion, and you could have taken the entry straight off the top of this. As soon as this candle closed, we inverted the IFEG. You could have taken the trade right there. I mean, that would have been, a little bit of drawdown, stop at the low of that candle. But, after that, you were, have a look at it. Just went skyrocketing. What could you have pulled out of that if you were able to hold on? 5R, 5.5R. I would have targeted probably this high or these highs here, because of these being relative equal highs. Even that's still 2.5R. $370 on one contract if you were playing that, or 10 micros. So this was a valid trade. that I didn't take. I was going to have a look at the loss that I took yesterday as well. That was also on oil. Let's go back. Where were we? Yeah, okay. Let's just go back. And I like to go through these details because it's, you know, good for you guys as well to see that, you know, these little errors that we make that can be corrected and perfected. That's why we should always review our trades. Hey Sergio, yes, there was a nice long on 6E. We'll have a look at that in a moment. So this was the trade I was looking at. So we expanded through. I didn't get in on this. If you wanted to use this as the breaker, I didn't actually look at this for whatever reason. I was more looking at a continuation trade. I think because there's so many candles through here, I generally don't want to see too many candles in the complete formation of the Pegasus or the unicorn. This formation was inside this candle and not inside this candle, so I much prefer to see it in the swing point candle. But once we got the swing, then I was looking for a continuation trade, and what I initially wanted to see was price, once we broke through this level, to come back and test this level, and then I would have taken the trade from there. So we get a strong closure through. What happens is price doesn't tap back in. So I'm thinking, all right, well, we've missed our opportunity here. I'll wait and see what the next move is. We put in a down close candle. So then I was looking for a closure through that level. And then I was going to take the trade. So we got the closure through. I put a limit order in and I got stopped out straight away. One of those ones where I was in it for about, what, 3 or 4 minutes, whatever. So that was the trade I was looking at taking, and I got stopped out immediately. Had I stuck with the original entry, then I would have actually been able to grab quite a good trade, because price did tap in, very little drawdown, 1 or 2 ticks, and then price ran away. Now, was this really a valid trade? Not really, and the reason being is this order block or these series of opposing candles, you want to see those into a point of interest. So ideally a swing low or into a FVG from the same time frame. So we didn't have that here. Price didn't retrace into a point of interest, so it's not really a valid trade. So that was my key takeaway, really. And then also probably a little impatient, looking to get into the trade rather than waiting for that retracement. And again, this was not a valid block because this didn't come into a point of interest either, this down close candle. It wasn't out of a point of interest. So that was my takeaways from that oil trade. Let's have a quick look at 6E. The 6E did have a nice example here. Now this is a nice a nice Pegasus off the Asia low. We have a single FEG in the leg that took liquidity. We have another FEG here, which is our breakaway gap, and then we have a larger FEG here, all aligned with the breaker, and price just ran higher. Now that wasn't a valid C2 or a swing point candle, because this candle that actually created the swing point, so the low down here, didn't close back inside the range of the previous candle. So that's a great formation, and it is off an important level. In my trade plan, I wouldn't take that trade. Because it wasn't a swing point candle closure. Does look very clean though. All right, let's move over to NQ. Let's have a look at the daily. Also, guys, I'm now affiliated with FX Replay, so if you guys are interested in using the program at all, there's a link in the description and you can get 15% off when you sign up to FX Replay using the link in the description. We're having displacement here with NQ on the daily. We're looking at here using the ADR. Our average daily range is 334. So that would see price reach up, close to this high here. With the displacement, we are at a swing high. It looks like price might be moving through and actually going to close above this bearish FEG here as well. Price did gap up. It opened, but it filled most of that gap. We have our London and Asia sessions open, so there is potential for a price to reverse here. In the 7 hour at the moment, price is really quite strong here. What I'd be looking for is down on a 30 or an hour to see if we get a change in the state of delivery at New York Open or prior to, and then looking for a New York reversal if that's going to happen. Or we may just end up seeing continuation through the rest of the day up to this daily high up here. Working with the trend, obviously. The trend is bullish at the moment. What do we have on the daily also? If today's candle closes through this level, we've got a daily bullish breaker. The price is doing a good job at the moment looking to get through that level and with that displacement as well. So I wouldn't be flipping too bearish just yet. I'd be waiting to see if we do get a change in the state of delivery on the 30-minute or the hourly chart. How long I've been using the ADR for? I've been working on it for since the start of the year or a little bit before that, but I've really implemented it now full time, so it's something I look at every day, which is why I worked on the indicator as well. So I had this as a free indicator for people to use, and myself, obviously. You know, we can keep paying for stuff. It gets a bit much, paying for this indicator, that mentorship, this mentorship, you know. So I'm just trying to also limit the business expenses, I suppose you could say. So I'm going to remain bullish on NQ at the moment, unless we get that change in the state of delivery because of this displacement. ES, similar story. Let's clear that chart. Average daily range is 66. What have we moved? We've moved, you know, a bit under half of that at the moment. So 66 puts us up around this level here. And we are displacing higher through this level as well. So yes, we are at a swing point, a bearish point of interest, so to speak. But until we get a change in the state of delivery, the trend is your friend. We just keep moving higher at the moment. We are building plenty of low resistance liquidity for when we do reverse. But at the moment, I don't see any sign just yet that we're going to reverse. I want to see that change in the state of delivery. And I am happy to use the hour or the 30-minute for that. 7 hour, we're just obviously looking at that continued expansion at the moment. So if we're going to turn around here, then it will be a New York reversal. If not, we are just going to scoot higher. So I'm going to stay bullish for ES as well. Let's have a look at oil. Move up to the daily first. So we do have a bearish unicorn here. High, low, higher, high. Chemo. Hello, buddy. Good morning. So we do have a bearish unicorn here. We have displacement at the moment. If this current daily candle doesn't obviously close that level. So we could run our projections from the high to the low using this same candle, because that is the high and the low. Let's see, this is our potential daily target. Not saying we're going to get there today, obviously, but I'd be looking for these lows through here. Got to get through this bullish FEG first, obviously. But this is potential where price might be moving to. And we do have low resistance liquidity through here as well. Moving to the 7 hour. Looks like we're getting a London reversal. We didn't measure the daily range, so let's do that quickly. $2.05 is the daily range. We've moved about $1.16 at the moment, so there is potential for price to move around another dollar, which puts us around the midpoint of this bullish FEG. Okay, 7 hour, we've got what's looking like a London reversal. The price is coming back up a little. We'll be watching to see how this candle closes. Price does continue to respect these bearish PD arrays as we move lower. Still in a downtrend here. To get a sweep, what was that? That was to get a sweep of a low here with what looks like a possible change in the state of delivery. We'll see how price reacts to this level. See if this holds price and supports higher prices, or if we just move through. If we move through that level, then we could run our projections off of here. And this could give us a potential target region. Aligned with that low resistance liquidity through here. So I'd like to see that. It's at an area of interest, low resistance liquidity, aligned with our standard deviations. So that's the low of today so far. And if we run another dollar lower or thereabouts, that'll see us roughly get to this -1 if price does move lower today. On the 30-minute, we do have a change in the state of delivery. So we do have a bearish change in state of delivery here after this move higher. With a close below these up close candles and displacement. So we see this displacement here and here as well. So look at gold, start out on the daily. The price pushed out of this bullish FEG. Really nice move out of this FEG here. So we're leaning on price to move higher. We are at a bearish point of interest, but this move was quite strong through here as well. So we'll see if we've got, what do we see on the 7-hour? We're looking at that possible London reversal. And then we were looking for that change in the state of delivery, weren't we? So we had that here on the 30-minute. So if price moves higher here, we're going to want to see this level respected. So price, I don't mind if price runs higher, obviously, but if we're looking for lower prices, then we want to see price reject off here. And I do like this. We had this candle closure, as we already discussed. Possibly getting the same here, and it is out of a point of interest. There is a bullish FEG here. We'll just have to wait and see how this closes. Let's have a look at Bitcoin on the daily. Nice. So price closed. So we had this marked out yesterday. If you watched yesterday's video, we had this 50% level of the wick marked out. Yeah, we can have a look at ETH. I need ETH to move as well, pal. Don't worry. Plus my bag of altcoins. So we got to close above that level, which is good to see. So now, looking at today's candle, I want to see the previous day's range respected. So if we can get rid of that one. If we come down, I want to see this level respected and then look to push higher. I'm still looking for that 111,000, which was the target that we set out on the channel quite some time ago now, around this level here. So I'd be bullish today for Bitcoin. Yes, let's have a look at ETH. Nice chop. Nice barcode, ETH. Daily barcode. Okay. We've got price moving out of this bearish FEG. If you're using IRL to ERL concept, then you're looking for price here to potentially sweep this low and then look to come back up in. We want to get through this level. This seems to be a critical level. We want to move past this high and get a close through this bearish FEG. Still got a bit of work to do once we do that. Got this swing high into a bearish FEG. So usually this shows this would be a strong reversal level. Trust me. Trust me, Jake, I want it to go higher. At the moment, we need a bit of a rally to push through these levels. Oh, you're only new at this. I've been holding way longer than that. I'm a bear market veteran. I think I got into crypto right around almost the high, and that's where I started my trading journey. So that was just around 2020, I think. Yeah, years. Yeah. Hey, Josh, how are you, buddy? Josh knows me. I'm a mess, aren't I, Josh, when it comes to crypto? I've got to see it do something. I actually want to ride this bull run and get out. I've actually pretty much had enough of crypto. I'll hold on to my I'll probably hold on to my Bitcoin, but everything else I'll sell. A 2020 yeet. Yeah. I sort of went all in on 2020. Right at near the peak. All right, guys. Anything else you want me to have a look at before we wrap up? Remember to jump into the description there, guys, and head over to Trade Foundry, where you can hang out with us every day. We stream live in there 3 days a week minimum. Make sure to sub to the channel too, guys. Share the channel far and wide. Help me get to that 1,000 subs. I really want to give away to my funded futures accounts, but I can't give them away until we reach 1,000 subs on the channel. So I need your help to get there. Mr. Nobody, what is your question? Is there any difference between 8:30 to 9:30 opening NQ? Well, 9:30 is when the New York Stock Exchange opens. But you will see price move at 8:30. Sometimes that's an opposing move to what price might actually do, and then we get the Judas swing at 9:30. Remember though, commodities, so such as gold and oil, the market opens for them at 9. The 8:30 reacts. You'll see a reaction at 8:30 because that's when the news embargo lifts, as Josh just pointed out. The news embargo lifts at 8:30. That's why you'll generally see, and that doesn't mean that there's high impact news at 8:30. That's just when the news embargo lifts, and then you'll see price react to that time for that reason. So I hope that helped answer your question, Mr. Nobody. All right, guys, we'll wrap it up there unless there's any last minute questions. Get it in now, or we're going to go and get ready for New York Open. I'm doing a live stream today in Trade Foundry, so you can hop over and join us there. That'll be kicking off about 9:15. And hopefully we can get a live execution that plays out to 2R, at least. All right, guys, take care. We'll be back again this time next week. Be sure to sub to the channel. I drop videos every day. I do my daily market analysis. I'm going to start doing some more concept videos as well. And I'll see you over in Trade Foundry. See you guys. Bye for now.